So one of the main reasons that traders fail is because they system hop. System hopping is the inability to stick with a single or multiple trading strategies or trading systems, whatever you want to call it. Now, one of the reasons that traders system hop is because they have a false expectation of either the return on investment that that system or strategy should be giving them, or the path in which that return on investment is going to come. Now, why do they have a false expectation of that? Well, because they probably haven't done the work. They've made up something or listened to something on the internet that tells them this is what you should expect, instead of referring to their own data. And when we say referring to your own data, that is either going to be your live trading data if you're someone that's been doing it for a while live, or your backtesting data if someone is just starting off. I know it seems as if we touch on backtesting in almost every episode, but it really is so powerful. It is the foundation, the backbone to everything you're going to do in trading, from your statistical advantage in the market to your trading psychology and your confidence. And these are all the things that you need to become a consistently profitable trader. And the reason I brought this idea up is because I recently spoke with a trader who I worked with a while ago who shot me a message, updated me on how he's doing since he's been trading live. He's been trading live for about the past 4 months now and is very happy with his data. And when we showed me his stats, it made me think of kind of the other messages that I get from struggling traders. And you look at his stats in front of you, look at the first 4 months of his trading, and you can see it's a 6.9% return on the first month, which is excellent. For me, again, I try to average anywhere between 2% and 5%. If I can average 2% a month, I'm happy with that. If I can average 5% a month, that's outstanding. For you guys that are new, if you want to get an idea, and everybody's system and strategy is different, obviously, this is why you want to refer to your backtesting results to get a true predictor of what you can expect from your trading. But in general, most traders would consider you to be a good trader if you can average 2% a month. Now, again, it doesn't mean 2% every month, but throughout the entirety of the year, 2% a month, which ends up putting you at about 25% return, or a little bit less than that for your annual return on investment. If you can average 5% a month, you're considered one of the best traders out there. That's a 60% return on investment. Now, again, there are going to be really, really good years where you make 100% return or more. There are going to be struggling years where you maybe get 10% below your expectation. We're talking about averages here and in general over the long run. So when you hear something like 6% a month or almost 7% a month, that should be really exciting. But many traders will say, that's okay. Then to follow that up with a 3.5% return, again, another good return, it falls within that category. Many new traders, if you don't have that backtesting data, if you don't have that confidence, you may see that as a disappointment. Why? Because, the month before I did 7%, now I only did half of that. Something must be going wrong. Is the strategy still working the way it's supposed to? Then on month number 3, here we go. Negative 3.5%. So you went from a 7% return, which had you excited but not satisfied, now to a 3.5% return. You halved it. Now you're like, what's going wrong? Now you're going to a negative 3.5% return and you're saying something must be wrong. The strategy stopped working. The system is broken. What do? You bail, you jump ship, you ditch it, you go to something else. Now, the traders that go to something else, all you do is restart the process and you lose something that's very valuable, time. If you backtest it, now you got to go through the time of backtesting. If you don't backtest and you're just kind of, vulturing the internet for different ideas, you got to spend time on YouTube, spend time in books trying to find new strategies to trade. And then ultimately you're going to end up in the same thing. You're still going to go through times where it's good, times where it's bad, and then you'll end up getting to that negative time and you'll end up restarting the process, ditching it and starting over, and you'll stay on that hamster wheel. The worst part is when you ditch the strategy after that bad month, look what happened a month after that. 9.5% return, the trader's best month. So patience pays, discipline pays. The trader that knew his results, stuck with it, kind of managed through the bad times, knowing that, hey, this was a bad month, but the first 2 were good. I'm still on the right track, bigger picture. They were rewarded for their discipline. The ones that ditch it in month 3, you pay the ultimate price. Not only do you go back to the drawing board, but you miss out on the most profitable month that there was. So again, moral of the story is if you want to avoid this, you have to have confidence in yourself. You have to have confidence in your system and your strategy. How do you have confidence in your system and your strategy? You do the work on the back end. You do that back testing, you do that forward testing, that demo trading, whatever it is. When you start having doubts, you refer to your back testing data and you ask yourself this question: is anything out of the norm? Whether it's the path that you're taking to your annual return on investment, or if it's just kind of the ups and downs. What is my worst month? What is my worst losing streak? How does what's happening live compare to that? If it's in line, there's nothing to worry about. If something is out of line, then there's two solutions, right? One, maybe your system and strategy stopped working, right? That can happen. The most likely problem is this, though. You're doing something to sabotage your system or your strategy. So you need to go back and check if you're making mistakes. Are you taking profits early? Are you missing trades, moving stops, all of that fun stuff? And ask yourself, is it a natural drawdown or a self-inflicted drawdown? So hopefully that helped. I know a lot of newer traders deal with this, so I wanted to bring it up. If you're new and you want more on the backtesting topic, there's lots on that. Just go ahead and YouTube search Akil Stokes backtesting, or maybe a Trading Coach podcast backtesting. There's probably a lot of episodes that will come up that can help you out. And enjoy. And of course, you can ask me any questions in the comment section below. I do read each and every one of them, and I'll gladly reply to you, or I'll turn it into a podcast episode, as I love getting those topics and reaching more and more people with them. All right, let's hop into the charts. Before we do, hit that subscribe button, hit that like button, make sure that notification bell is tapped as well. That way you don't miss the next upload. There's a lot that comes here on the YouTube channel throughout the week, and I don't want you to miss it. Let's hop into the charts and let's show you some opportunities that are on my radar. So we have a handful to look at this week. I'm going to try and get through it as sweet and simple as possible without blabbling too much about technical jargon. But we're going to start off here on the pound yen weekly chart just to get some perspective about the pound yen. You know, the pound yen has been a pair that we've been following for a while, and we still have the same outlook. We're still looking for a continued bullish move despite really the most recent actions. Now, we spoke about this during the week, during the live streams, but the pound yen has basically put in a series of double tops, question mark. Again, it's going to depend on how you define double tops. You know, different traders define them in different ways. Different traders may even define them the same way, but there may be a difference between what is a takeable double top and not a takeable double top. For me, the depth of the retracement does play a role, meaning if this is the first top, the depth of this V point right here before putting the second top does play a role on whether I view it as a double top or a continuation setup. And what I see happening with here in the pound yen is actually a continuation setup, because we have retested our previous new structure highs right here. And although we've come up to retest the highs, our previous highs, and we got a pretty good hold, the fact that I'm on the weekly right now, the fact that we were able to really survive the week with no bearish positivity, right? This is a red candle, but it's really a bullish candle because we got sucked back up and finished in the upper third. I'm looking at this as a morphing pattern, meaning something that goes from looking like a double top to an ascending triangle. By the way, if you're new to the channel, this was also a cipher pattern we had a few weeks ago. If you guys remember, X to A to B, B to C, C to D. We had a few of these. The euro yen ones failed. The pound yen one worked out perfectly. So 1 for 1 there, which is pretty cool as far as the cipher predictions go. But you can see that price action has been making highs. We've retraced off of them. The retracements are getting shorter. This is setting up to be an ascending triangle type of pattern. And the longer that we can stay in this upper range, really, the greater my prediction comes of a bullish breakout. Now, throughout the week, we had an opportunity to get involved in that bullish breakout. If you want to sneak yourself involved or sneak yourself into it, we had a nice little bat pattern here, a Gartley pattern, excuse me. Now, this is done and over, so don't get involved now, but this could have been or is an example of a way you can position yourself before the breakout. So anyway, back to the point, right? I said I wouldn't blabble, and I did. We're looking for pound yen to still have the opportunity to go up to about 174. So there's a lot of room since we're currently trading at about, 166 is somewhere around there. And again, if you're able to find yourself to position yourself before the breakout, that's a good idea. If not, the other two ways to trade these breakout patterns are, one, trade it during the breakout, so some type of buy stop right here where you get involved while we're breaking out, or wait for the breakout. This is going to be the most conservative one. Wait for the breakout, wait for the potential retest, and then involve yourself in a typical pullback trade, looking to trade it up to that level we projected, 174s. Why 174s? Well, we'll zoom out a little bit. Look left, structure leaves clues. Sticking to the pattern theme, Euro Aussie, I'm here on the daily chart to start off. This has a potential pattern as well. Now, the breakout outlook isn't the same as the pound yen. We haven't been able to clear these previous structure highs we've been holding here. And although it is showing signs of potential bullish breakout, from a technical perspective, there's nothing that I can see that allows me to make that prediction. So I can't follow through with anything in that way. But I do think there's a good opportunity for this pattern to complete, because if we go back down to a 4 hour, we kind of look at what we've been doing with this consolidation level, right? We've been consolidating a lot right in this midpoint, right? We have our highs up here, obviously, our highs back here, but right in this midpoint, we've seen a lot of consolidation, right? And if we look at this potential pattern, right, we're going to have a potential bat pattern that looks like this. Let me get my Fibonacci retracement out. I'm going to take it from our swing low right here. Let me try that again. If I click it, my swing low to my swing high. Let's measure out this ratio pattern, which is a bat pattern. X to A is our first move. This first retracement is our A to B. This is our B to C, and then our C to D for the bat pattern specifically is going to come right to that 886. And the zone is going to be from that 886 to the X leg. And if you guys are new to ratio patterns, harmonic patterns, Fibonacci patterns, advanced patterns, however you want to call them, this isn't just some kind of voodoo magic trick. The reason these patterns form are the buying and selling habits of institutional traders, kind of like that accumulation and distribution type of deal. So we see this a lot in periods of consolidation. And again, this level for the bat pattern, that 886, that green line, is going to put us right at previous periods of consolidation. And with these advanced pattern formations, all we're looking for is a little jump, right? We're not looking for a full continuation up here. We're looking for a nice short and sweet move from this area back up to this area. And there's clearly enough opportunity for that to happen here with the Euro Aussie. So next, we're going to take a step away from patterns, take a step away from the Forex market actually, and look at the NASDAQ here on the 4 hour. And this is going to be a simple price action type of trade. Now, again, if you're new to the channel, my philosophy is heavily based in understanding, identifying, and reading structure, right? You always hear me say, look left, structure leaves clues, which is a great little rhyme or whatever saying that my mentor installed in my head forever. But it reminds me on a daily basis, what is the backbone of my trading? What is the most important thing? And structure levels, supply and demand, you can look at them that way as well. You know, that is what drives economics. That is what drives the market. And what you'll notice is that you'll see structure levels act like magnets, right? They are in very important points where a price is either pulled towards them or it is pushed away from them. So it makes it very easy to project where price is likely to go, and how you use that depends on the situation, whether you're using that level as a place to take targets or whether you're using that level as a place to look for trading opportunities. And right here on the NASDAQ, we have two levels that stand out. So we have our obvious level of consolidation right here, obvious to me at least, where price action has come down. We found this kind of structure support shelf right there before blasting through with this high momentum bearish candle. We also have this little pregnant pause area right here, right? So price action gave a very strong bearish move. And then we kind of paused for a little bit. Look left, structure leaves clues, did something very similar to the left here as well, before another high momentum move. These areas are very important, again, especially if you're into supply and demand. And I would expect that price continues up to this level. Now, this is going to offer two opportunities, right? One is going to be, if you're a counter trend trader, a short opportunity at this level. So a chance to get a little bit of relief. I'm not too keen on the short level because we have that overlapping levels of structure here. So I think it could be very sneaky. I don't necessarily think we're going to reverse. We could just kind of consolidate sideways and take a pregnant pause like we did before continuing higher. So you got to be patient with the potential short. But I do think this sets up a nice target point for a potential long. So if we go down one more time frame to the hourly, right, you can see the market has been ebbing and flowing pretty decently. We had a nice hold at this previous level of structure, something very similar, a pregnant pause here, before putting in a new structure high. If we get a little bit of relief to start the week, meaning the market takes a little bit of a breather, comes back to this level, or even a little bit lower to this level right here, this is going to be a nice opportunity that we can use to take advantage of a pullback trade and trade it up to our next level of structure. What's funny is the other day I got a comment on my YouTube channel here during one of the live stream videos saying, hey, Akil, basically, hey, I come in and you talk about the same thing every day. You look at the same setups every day. There's nothing really entertaining about your channel. And it brought the biggest smile to my face. And the reason for that is what consistently profitable trading looks like, right? This isn't the casino. We're not trading for the bells and whistles. We're not, pulling the little lever on the slot machine and getting all excited when the things spin, knowing that we're probably going to lose money. This is a business, and I don't know how many of you guys are business owners, but if you're a business owner, you have a business plan, and your business plan is laid out, and it's laid out in a way that your business will be profitable. And you're not really kind of getting away from your business plan. You're evolving it. Yes, you're evaluating it and trying to make it better, but on a day-to-day perspective, you are sticking to that plan. You are doing 1, 2, 3, X, Y, Z. So if you're new to the channel and you're looking for excitement, I'm sorry, you got the wrong channel. You're not going to get that. You're not going to get a million different new, funky indicators and funky trading strategies each and every week, because that's not how I personally trade. That's not how I personally teach. What you're going to get is a solid foundation of knowledge, concepts that have lasted the test of time in trading. I'm a classical chartist, right? Along with some advanced stuff as well. And you're going to get that in different scenarios. So you're going to get different looks at the market. And if that's not something you like, then I would suggest that you go to a different channel. If that is something you like, then I would expect you to tune in every single week for the Trading Edge video. I expect you to tune in every single time we go to the live stream. And if you're really serious about getting better as a trader, I would suggest heading to our website, www.tier1trading.com, checking out that 14-day trial and digging into all the informative information that's on there to help you become a consistently profitable trader and get you on the right track. Got it? See you guys next week.